management of Ashok Leyland. Gopal Mahadevan, the CFO, is with us this morning. We've of course got lots to discuss, the down cycle, what are the steps being taken to combat that slowdown, and of course numbers. Mr. Mahadevan, thanks for joining us. Which phase of the CV slowdown are we in at present according to you, and how have these cycles typically played out in the past?
See, I have a slightly different take on this. I don't think we are in the midst of a CV cycle. I think we are, looking at a confluence of things happening. The first one is there has been a general dampening of the economy, so we are waiting for the economy to revive and start growing. I think with the recent announcements of the government, the spend on infrastructure, we are waiting for all of that to kick off. If that happens, I think there'll be general economic growth that happens. As far as the CV is concerned, you see, it's a direct correlation between what happens in the economy, and that kind of has a direct effect on the CV business or the CV industry. This industry has witnessed quite a bit. If you look at it over the last 3-4 years, we've had the BS3 to BS4 transition. After that, we had GST. After that, we had the effect of demonetization. And then we have had the axle load norms. Then we have had the NBFC crisis. But through all of this, which has had a direct impact on the CV industry, the CV industry continued to grow because there was that inherent growth, and demand was fueled by this growth. So as we move forward, there are 2-3 things we should note. One is, next year we're going into BS6. So, what we thought would happen is in the current year, there would be a pre-buy because BS6 vehicles would be more expensive than BS4. But that has not yet happened, possibly because there's a little bit of uncertainty on how the economy is going to swing. That is one part. The second part is, I think this time along, the performance of the CV industry is not being standalone. You've seen the same thing happening in pass cars as well as in two-wheelers, which has hitherto never happened. These cycles have been predominantly different. So somewhere along the line, I think the mood and sentiment has changed, and that has to be lifted. If that happens, I would say that demand should be back.
Is this slowdown cyclical in nature, according to you, or structural? And how much longer before we actually do see demand kicking in? Any green shoots that you're seeing at all at the moment?
I think what's required now is, a bit of positive news on various fronts, because we've also seen the banking industry and the NBFC industry also getting deeply affected by a lot of things happening in that sector. I think the government has announced that it would be going after infrastructure spend, and hopefully that should start helping the overall, economic the position of the economy. The second thing is, I think industry should be given a fillip through positive policy making. That would also help. And specifically the commercial vehicle industry, I think clarity on the GST, whether it's going to be reduced, because that can be a major fillip, clarity on the scrappage policy, and if there are incentives laid out that, because we have, old vehicles which need to be scrapped. Now, if all of this were to happen, I would say that things can turn a little positive. But in terms of green shoots, I have not seen anything immediately. All we are looking for is that the buyback and the demand pull may start from September and last through end of December or mid or late January. This is our expectation at the moment, and that's how we are planning for this.
Okay, so you're saying unless there's clarity on these other sectors, you're likely to see choppiness in CV demand. How soon do you expect government to take action? And has the industry suggested any course correction policies to revive the sector to the government?
We are requesting, I think, the Society of Indian Automobile Manufacturers, of which Ashok Leyland is also a member, and so are other manufacturers, not just commercial vehicle manufacturers, but also two-wheeler and pass car manufacturers. I think all of us have represented for their respective industries for the government to consider giving a fillip, so that, this is a very important sector. All the 3 sectors put together, CV, Pascar and two-wheeler, are very large employers and have a large impact on the economy. And these are industries which have built a huge amount of capability as well. For instance, even if you look at the commercial vehicle industry, we possibly are the only country which is moving from BS4 to BS6 in one leap, and that too within 2 years of introduction of BS4. So we have requested the government to consider giving some fillip and incentives to the sector so that, the demand can be revived. And let's hope that they consider this favorably.
Right. What are your own expectations of the industry start of the year then?
Sure. Let me explain to you what we have been doing instead of, let me demystify this. What we did at the beginning of the year, all of us planned that this industry should grow, the CV business, the Indian commercial vehicle industry will grow that by about 5 to 10% or 10% roundabout. Now, the expectation was that the pre-buy will start happening in Q2 and Q3 and maybe last a little bit into January. Now, when that is how you plan things at the beginning of the year. Having done that, what you do then is to start building up a little bit of inventory in the system, both, and especially at our end, so that if there is a sudden surge in demand, you don't lose a sale and you are able to deliver, because you are going to build inventories of fast-moving products. They're not going to get aged or they don't have a shelf life of a few weeks or a few months, So that was the whole strategy.
Talk to us about the market share gains in LCV versus larger vehicles. How are order wins helping you to do that?
As far as our devolatilization is concerned, well, we have been successful in some, we have not been successful in some. For example, the LCV business is doing exceptionally well. It has grown at more than 16% for the current quarter and has actually gained, market share as well. So 13%, I'm sorry. So it has gained in market share as well. So it has been, it's a good counter to, the cycle of the large commercial vehicle. As far as international is concerned, well, we haven't grown. In fact, we have had quite a bit of degrowth in the current quarter for the following reasons. First, the traditional market that we were in, Middle East or in Sri Lanka, the markets have not grown. We are expecting some orders to be executed as we move forward, including certain project orders. So maybe things will start setting itself right as we move forward into the year. Having said that, we are also reorganizing the entire export structure as well as our strategy. We have the right products in place now because we needed to have LHT and RHT. Defense, we continue to win tenders, but we are waiting for the government to award those tenders to us. I mean, in terms of orders on the vehicles. But we have to build our capability. This is a long gestation business, and we are doing reasonably well in winning the tenders.
You have mentioned about cost control, and there has been a QOQ margin improvement which the markets have liked. Is this attributable to the cost measures? Given that you want to cut down 500 crores in terms of costing, would you rethink at any of the Capex investing, any of the discounting strategy that you have?
No, the 400 to 500 crores that I'm talking about is operating cost, including material. We'll see whether we can use alternative designs, alternative material, and of course all the overheads, which is manufacturing, sales, supply chain, administrative overheads, people productivity and stuff like that. It does not include discounting. I think we monitor, we don't look at discounts, we look at the net price realization of the product. So we keep monitoring as to where the net price realization movement is vis-a-vis last month and vis-a-vis the material cost increase or decrease as well. So, this is completely different. So we try to, I would say, look at the contribution over material cost as a different track, and all the other expenditures below that in a different track.
Are you recalibrating Capex to adjust to the lowering demand?
Well, we are recalibrating certainly, but there are certain things we will not want to go back because this can affect our capability specifically. Like, for example, investment into modular business program or modular vehicle program. The second one is the BS6 transition. The third one is the Phoenix project for our LCV, which is very, very crucial, and we should have that product ready in the mid of next year or so, and that will kind of fill in a very important slot for us in the LCV business, which is also growing, and we believe that will be an important fillip to the further growth of LCV. Then we are also investing selectively in the electric vehicle program as well as for normal expansion projects. So we have not been spending Capex hugely over the last 5 years. We've been very, very careful, or if not stingy, on Capex. So as we move forward, we need to have some amount of investment being done, because I can't plan capacity only for here and now. If we do that, then when the market starts to grow, we won't be ready for it. So we would, and this capacity is such that in certain portions you can add it incrementally, but in certain aspects of the capacity, you will have to add it in chunks. A good example is a paint shop. I cannot add a small paint shop. I have to either add to a particular capacity or I don't add it at all. So there are certain things which will come up slightly like a big bump up, but we are being very, very careful that we are not setting up capacity or investing in Capex, which is not going to, add to my bottom line or ROC over the next, say, few years. We are very, very careful about that.
Okay. Could you also throw some light on the current utilization levels?
Well, it's a very difficult question in the sense what happens is we are tweaking our plant productivity as well as our plant operations almost on a weekly basis to figure out what is the demand pattern and how much should the manufacturing facilities be producing. And in that, there is also a further dimension to it that not all the manufacturing facilities produce, identical vehicles. So, for example, defense manufacturing or bus manufacturing is not done in Pantnagar. Right, so Pantnagar is more fully cabbed vehicles that happens. Now, of course, Ennore has the same capabilities but different variants of vehicles. So we have to mix and match and then look at what is the most optimal way of manufacturing. Our utilization must be about 60%, 60-65%, and then. But what we do is we have a good production run, so that we don't have a average production run running all through the month, but have a good production run and then if necessary take a shutdown for 6 to 10 days and then again start. That way it becomes more efficient.
How do you see the situation panning out given a host of changes are taking place, BS6 transition, the draft scrappage policy? There is only so much that, truckers can postpone their purchases to.
Yes, I agree. So that's why we are hoping that, they will start purchasing possibly very shortly and into Q3 as well.
Right, sir. Thank you so much, sir, for taking our time for us. Always good to get perspective from you.